This is the ERP Advisor. Today's episode, overview of enterprise accounting software.
Sean Windle is one of our speakers for today. Sean is the founder and managing principal of ERP Advisors Group based in Denver, Colorado. Hi, Sean.
Oh.
Lew Visscher is our guest joining us today. Lew spent a decade in public accounting and then went on to become CFO of 5 different companies. Most recently, being Catalyst Repository Systems, a legal tech company that was recently acquired by OpenText. Lew is the man behind the wildly popular Lew's List, a 12,000 member list for finance and accounting professional job opportunities. Hi, Lew.
Hello. Oh,
Hi. Oh my gosh, Lew, look at this photo that's up on the screen.
Yeah, that's a blast from the past there.
Oh my gosh. I think that's what you look like during your ERP implementation. Is that right?
Yeah, you needed to have a little bit of that when you went through that process.
Yeah, right. Oh my gosh, I love that. So today, on today's webinar, we're going to discuss how to get what you really want out of your enterprise accounting software. We're going to share examples of different configurations for different circumstances. So Sean, Lew, thank you for joining me today. Appreciate it.
Absolutely. Thank you.
Yeah. So, okay, we have a lot to cover today. An overview, it's a lot, right? But as we all know too well, the topic of enterprise accounting software can be a little bit overwhelming. But with the right guidance, advice, help, we can simplify it a little bit more and have it be a little bit easier to confront. So with that, Sean, I'm going to start with you. Kind of to frame today's conversation, why don't we start by discussing some of the different types of enterprise accounting software and how they're used? Can you speak to us about that?
Yeah, I definitely can. And it isn't as simple as you would think. So I'm thinking through all these options while my doggy's trying to join us here. But there's sort of a simple way to do it. Let's start with that. And then I'll get a little bit more into some of the specialized software for sure. But basically you have 4 tiers of accounting software. It's a little bit different than what most people talk about, but we've seen that there's 4. We'll start off with the lower end, which is the tier 4, which are applications like QuickBooks or Sage 50, MyOb, Zero, Accounting Seed. Like there's these sort of traditional apps that a lot of folks use as they're smaller, and then they kind of outgrow them, right? And they do accounting, core accounting, but can you do period closes and can you do really deep financial reporting? Yeah, kind of. But then as soon as you start getting outside of accounting, they start to kind of not do so well. That's sort of tier 4, right? Tier 3 is a little bit bigger application that does pretty good in accounting, but then also maybe another area like Sage 100. I was just talking to a former client this morning that has a several $100 million business that's running on Sage 100.
Oh, wow.
We've had QuickBooks clients that are, in the 6, 7, 8 digits sometimes. So so tier 3 is more like a good accounting package and maybe even deals with multi-company and a little bit more, maybe a little bit of currency, but then it also deals with like inventory or manufacturing or services or something else, right? Then the tier 2s are bigger. They do what the tier 4s and 3s do, but they usually have a deeper or wider breadth across the business and they have deeper functionality. So like a NetSuite, a Microsoft Dynamics 365 Business Central, Acumatica kind of floats in there too, where, you can have a bigger company that's running. It's still a mid-sized company that's running on that platform. And then there's the tier 1s, right? Those are the big SAP for HANA, Workday, Oracle products kind of fit up there. There's some Infor products these are big software applications, right? And they require a ton of maintenance but they're worth it because there's tons and tons of transactions or there's really deep requirements that you need for very complex federal regulatory reporting or something, or some real deep stuff that these big guys do. So there's tier 1, tier 2, tier 3, tier 4. Okay. That's sort of the types of accounting kind of core enterprise resource planning where we're tracking all these transactions so we can create the books. I don't want to put everybody to sleep, but that's sort of that. But then I think we had another presentation on sort of tools other than Excel to use for financial reporting.
Right.
And that financial reporting area is interesting too. I think Lew will talk a little bit about sort of recurring revenue and some of those things, I'm sure. But there's other apps out there that are used for other areas of accounting. Like I said, maybe billing. We need a specialized kind of billing app, or there might be a professional service automation for the way we do time and expense and invoicing for a services firm. Then there's also like reporting software, which is a whole topic in and of itself. And then there's consolidation and FP&A, financial planning and analysis. So the most important thing from all of that, if anybody remembers anything, I need you to remember this: figure out what you need before you go to market and start talking to all these people. Because you could be talking to Blackline, Concur, and OneStream, which probably doesn't mean a lot to a lot of folks on the call. But that's what happens. I need accounting software. I'm going to go out there. Those three companies offer something totally different. So key thing is that you're really focused on what you want to need and do the research to understand. But that's sort of just some of the pieces and parts of the market.
Yeah. So this is just kind of a simple question, I think. Like, there are so many factors to consider about how to approach what kind of enterprise software you need. Like, do you consider your size number one, or is it really just the needs of your company?
Oh, that's a great question. I would say the needs first. And then, I mean, definitely budget is a huge part of it, right? But we have, smaller organizations that spend more on software. And then we have larger organizations that spend little. So it sort of just depends. Start with what you need. And then usually in that category, you'll find different levels of applications that you can kind of figure out.
And that'll lead you to the 4 tiers, like
That's
which
right.
one you should approach.
That's
Okay.
exactly right.
Okay, good. So Lew, let me ask you about your project. From what I understand, what I've heard through the years, you had a fairly complex accounting setup at your last company. What can you tell us about the unique needs that you had for your software?
Yeah, thanks. And thanks to ERP for having me today. It's I don't know how unique or complex it was. I'll frame it just a little bit. So it was a legal technology company, which I would say was a cross between a tech-enabled services business and a software as a service business. So yes, we had some recurring revenue, but we also had monthly revenue that was based on volume and those kinds of things. So one of the complexities was, how do we get all the different inputs into the new system and therefore be able to create an invoice, because we had multiple operational systems that needed to be pulled from in order to get into our system. But to back up, we were on Peachtree, and while Peachtree did pretty good, we knew we were going to outgrow it. The real reason we made the change wasn't because we couldn't kind of probably limp along, but it was because we knew we had to be able to kind of scale as we grew. And that was our primary focus for the change. We were about 45 million in revenue when we sold. We were probably obviously a little less than that when we implemented NetSuite in 2017. And we were doing probably 500 to 700 invoices a month. And so we spent a lot of time kind of dealing with getting the different systems to talk to the NetSuite system. I mean, NetSuite, for all intents and purposes, does a pretty good job of all the basics, right? And we'll talk a little bit more about what we focused on and why we focused on some of the basics maybe a little bit later.
Yes, sure.
Perfect.
Yeah. So, so Sean, you touched on this just briefly in the beginning, and we have seen this from firsthand experience. But when there are so many excellent enterprise tools available for different organizations, why do we find that many accounting teams continue to still rely on Excel?
Oh man, Well, Excel is America's, I think, the world's greatest accounting system. I mean, if you look at the number of users of Excel and how many financial statements, I don't know, Lou, I mean, you've lived it, right? We've just been on the consulting side, but man, when you got to get your financials done, you dump them into Excel and you bang it out, right? I mean, I'm curious, Lou, to hear your thought on that, actually.
Yeah, I was going to say, everybody used that tool. It was the de facto standard almost everywhere. I don't care if you were a small company or a big company. And if you were a big company, you dumped your system into it, and that's how you manipulated the data.
Right.
Even if you look at adaptive planning or Vena or other tools, and I'm only familiar with those two, they're really just fancy versions of Excel.
That's right.
In my view. And so Excel has always been kind of the basis for those things. And frankly, Excel works. So it's got some amazing functionality if you know how to use it.
Yeah. Yeah, I think what we've seen from from when companies like if we take the example that Lou gave between Vena and Adaptive, some of the other more prevalent FP&A tools, Deborah, that would be out there based on your question is it does kind of depend on what app you're currently on. So NetSuite has NetSuite planning and budgeting, or there's the Oracle products, or Microsoft. You hear a lot about a package called Solver that's out there that does FP&A. And then there's also Planful. And, if you look at Gartner's Magic Quadrant for, I think they call it cloud FP&A apps. We just did this for several clients. You'll see some other apps out there, but those are some of the prevalent apps. But I think, yeah, I mean, Lou, even last year, we saw this with clients where on the forecasting side, right? Building a forecast in some fancy schmancy tool, maybe the big guys need it, although they're usually in Excel, like you said. But in reality, they've been kind of viewed as nice to have. But I'll tell you what, last year, great example, we had a software client that had to do like 8 different plans. There was one in March of 2019 or 2020, April 2020, by then they're reducing what they think their revenue is going to be. So like, wow, do we have to like fire a bunch of people? I don't want to fire a bunch of people. Like, whoa. So these tools really help people to be able to create a scenario to keep a little bit of the emotion out of the business decision. And then being able to look at different scenarios to say, okay, what really is the right way to approach these changes in the market? And I really think this, FP&A, forecasting planning software. You also hear it called enterprise performance management. Oracle uses that term, or corporate performance management. I think OneStream calls their stuff CPM. There's some other vendors. But I think that was really telling, I think, to me, Lou, to where I saw like these FP&A apps all of a sudden, like, wow, people like this really matters. Even doing a 6 to 6, the 6+6 forecast, 6 months of actuals plus 6 of forecast. You can do it in Excel, but I was really surprised to see that last year. Did you talk to any folks that kind of ran through anything similar like that, Lou?
I did. We had Excel for a model. I was at Catalyst for 16, 17 years, and I created it, and it was, became kind of a bastardized version of, Excel. And all of a sudden we said, look, we got to change this because, it would take somebody forever to kind of get through and change it for assumptions. And we ultimately said, we've got to get something that integrates better with, and we chose NetSuite obviously back in 17, but we needed to have something that integrated with that better to match up with the thing. And so we ended up going with Vena, which is a whole nother different story. But, those tools I think can do a pretty good job for companies, depending on all the facts and again, kind of based on your needs. I mean, if you're reforecasting every month or have a rolling forecast, or, reforecasting every quarter, and have a big discipline around tracking budget to actual, and you're able to do that, I think a great planning system or tool can be very, very helpful.
I think, and Julia, with what Lou said is how I would give you sort of the succinct answer is when you start to get into some of these complex requirements, where there is also a reality of a person who built the model. And we had a association here in Denver a couple years ago that we helped through that process. The gentleman had built out an unbelievable forecast, but there was just concern about, him retiring, right? Or winning the lottery. We don't wish our clients in buses anymore, it's lotteries. So moving into an app like Lew talked about can help for others to get some exposure to it too. So, QuickBooks and Excel, there's sort of these little indicators that we look for that are around pain, right? And it's pain today. And as you grow, again, just like Lew said, that, more forecasts out, we see this in the future. That's really what drives towards okay, we got to get out of Excel. Years ago, one last thing, and then we can move on. I was kind of thinking of an analogy for Excel, and the only analogy I could come up with was sort of like the ladies in the team may like this more. I have to be careful, especially nowadays, but like it's this guy that you rely on, and he's always a great guy, Excel. Oh, he's always there for me. I can do anything. He comes in and he's great, except when he doesn't. My wife kind of says this with me about house projects, although I'm getting better, but like things blow up and the Excel formulas break, or the spreadsheet gets corrupted, or we wrote over the old one and now we don't have the new one. So there's a lot of reliance. But when the problems start to happen, that's when it's like, okay, no, we can't you don't have to go through those problems. With Excel, there are other options. There's going to be some investment to get into them, but just know there's other options. And I think people kind of innately know, CFOs, controllers know, like, okay, we've kind of outgrown these. So that's usually when they're like, that's it with Excel.
Well, like Lew said, Excel works, right? It does what it needs to do, but sometimes you need to grow and evolve to have something more sophisticated that
Did you hear that from my wife about me? Is that what you're saying? Just
never,
kidding. Come on, it's sort of the same thing.
Yes, exactly.
Just kidding, but you're right. That's it.
Yes. So Lew, that leads me to my next question. You had a bit of an unconventional ERP implementation. What lessons did you learn that you can share with the people joining us today that might help them on their journey?
Yeah, it was unconventional in the fact that it went very quickly from the time we signed a contract with NetSuite, which I think was early December, and we went live effectively January 1. Now that was live a little bit later, so it's very fast. I think 4 things we kind of did through that process, and I think we're a little, as you said, unconventional. And they were fairly risky, and we got lucky. But one of the things is we focused on the basics. These systems can do a lot of things. I mean, these new accounting systems and ERP systems can do, they can almost, make your bed in the morning or something. I mean, they are amazing. But we focused on the basics of our business, which was, invoicing customers, paying vendors, paying employees, getting, simple balance sheets and income statements out of the system. Once we got the records in there, we focused on those rather than every bell and whistle that these things can do to help our business. We said, we'll go after those later. So that was 1. 2 is I made a decision to have my folks they basically stopped their day job. For example, they didn't get invoices out. They didn't get vendors paid. And we stopped that for 3 to 4 weeks. I just felt like if I was going to have my people do their day jobs and this implementation, I was going to kill them, and especially over the holidays. And so a bit risky, but we just kind of stopped. And not all businesses can do that. We were fortunate enough to be able to do that. So that was the second thing. And then I made a decision to not go parallel as well. So a lot of people go and try to run all their transactions through their old system and then put them in the new system and then make sure everything syncs up and matches up and it all looks okay. We stopped December 31st effectively with the old system and went live with the new on January 1, kind of a cold turkey kind of concept. And so we did that. And I think the 4th, which is also probably the most important, is we did hire an expert consultant that knew NetSuite, that knew how it worked and how we could modify it and what was important, and was able to kind of lead us and guide us through the process throughout the way. I mean, some people probably think they could do it without one, and but I think that was key. So that was kind of the 4 things we did, and knock on wood, we were successful. It worked, but it didn't come without a lot of effort and some risk. So.
Right. Well, Lew, we had a question come in that asked, did you convert any data during that process?
Very little. It was almost all, some customer data, that we took over. So we didn't have to input all of that data for all of our customers and vendors.
Yeah, because that's a huge part of implementing new software.
Yep.
Data migration for sure. Yep. Yeah. So Lew, let me ask you again, as CFO, what do you wish you had known about the selection and implementation process before starting? Because hindsight is 20/20, of course, right?
Yeah. I was kind of thinking about this question. It's kind of an off the wall answer, but I kind of wish. So we sold the business January 2019, and by October 2019, they scrapped NetSuite and we went to their system, right? I mean, and it's kind of a sad thing. You saw all this effort and getting this all up, and then they go, we don't really want that. And that's just part of life.
Right.
And so had I known we'd have sold, 2 years later and hadn't gone through all that effort, I probably would have said, well, let's just stick with Peachtree and kind of strong arm it through. But, that's where hindsight's 20/20 as well. I think enterprise systems and software, change is scary for people. And they're scared that if they embark and make a decision as a CFO or top financial person to make a change and it doesn't work or it fails, they're next on the line.
That's right.
And guess what? Today it's working. And yeah, I got some issues and stuff, but I also know I need to do something different for the future. And I think, surrounding yourself with both good people internally and externally that can help you through that process will help that go. So maybe don't be too scared about the whole thing. We were nervous. I was probably kind of a turd through that whole thing, going based on attitude of getting this thing done, but we did. So.
Yeah. It's definitely a lot of pressure and a huge commitment for your employees, but then also financially, right? It's a big commitment, and what you do and make that choice, it better work. Yep. Isn't that what you always say, Sean?
Mm-hmm. Absolutely. Now, I think Lew, what I saw too during that time was, I think your leadership really helped the team to sort of have the confidence that this is the right way to go. Right. I mean, there's a couple factors that really, I think, led specifically as I kind of observed your implementation, that you kind of cleared the way for the team to say, okay, I bought us all this time. Now let's get it done. And let's focus on the really important tasks to get into the app. And then we can grow with it, over time. So some of our clients, a year end is a good time to go live too, because you don't have, transactional data through the year necessarily that you need to do to be able to drill in. You can just go on into the next year, but you can bring balances and other things over. But there's sort of an evolutionary steps you got to take on these implementations. And I think doing that first implementation fast, there's a lot of benefit, because it does get everybody sort of over the fear of, can we do this or not? No, we just did it. Whoa, yeah, we did. Now let's use the system now that we can see it and work with it and understand a little bit better. So, I think that's definitely a best practice. I think we did a white paper or something on big bang versus a phased approach for ERPs. And that was sort of our whole point, was just get into it and then you can grow with it over time. But there is one more thing, Lew, that I wanted to say, because we're in 5 different companies right now, because they are private equity backed And either, well, four, I just talked to somebody this morning who's not a client yet, but where they're either, the private equity firm is saying, or they know there's going to be a transition soon. And so do we go through a systems change or not? Or you have been through a transition recently and going through the change because the PE, the new owners want to do that, right? So there's all these considerations that go in around timing. And it's so funny. It can go either way, right? Like, oh, the current firm, the current owners say, no, we don't want to go through the effort or the risk. Well, but then when you get bought, you will get discounted. Your price will be lower when a more sophisticated private equity firm or whoever, hires us to come in and do diligence on a target. And we're like, yeah, their systems are, it's old and they don't know that, they don't have details into transactions and We're going to have to put that new system in place. And if it's going to cost this much, the discount's going to be at least twice that. So there is some considerations on those acquisitions, but I think fundamentally what we advise our clients, I know we talked a little bit about this, Lew, when you were looking too, was, is it really the right thing for this organization, right? The people that are here, do we have the firepower to support a new app and get through it and kind of muscle through it, like you said, and not be too much of turds as we go through, like you said, Lew, for sure. But is the business really going to benefit in the short term? Because if it's not, it's a lot of pain for people to go through and not see, that oh, there's a light at the tunnel. That tunnel needs to end in a matter of weeks, not just months, definitely not years. So we're in a company right now that is that was recently acquired by private equity, and the private equity firms asked us to come in and take a look and kind of determine if they should go. And when we were talking to the operator Monday, we would have said, no, don't change. It's not right for your organization. But then we talk to the equity firm and we understand their goals, and they're right in alignment with what the operator wants to do for sure. Then it's like, oh, we kind of need to do this now because it's only going to get more stressful, and we're only growing where we're growing throughout the world, and there's all these other things that come into play. But I will tell you, Juliet, especially to your question, well, we had another client last week, 2 weeks ago, where I actually had to say this. It was very awkward, but I said, you are not going to change unless everybody, all of the key stakeholders agree to do it. Like, if there's one thing that I would say from this whole session, probably from all of the calls we have ever done over 5 years, the most important thing I can communicate is, if there's not clear consensus on the final decision, do not change. Because just like Lew said, you're going to ask people to do things, especially usually around holidays. If it's not Christmas, it's around the 4th of July. And if there's any consideration about, we're not picking the right one. I mean, not everybody, but the really key people have to be on the same page before you switch. It's not worth it otherwise.
That's right.
Yeah, I didn't want to send the wrong message there. I would say most private equity backed companies should look at the needs of their system as if they are a standalone entity kind of for the foreseeable future. They should never say, oh, I think we're going to get acquired in 2 years, therefore I'm just going to stick it out, because I just think that's a wrong approach. I think they should look at it as if it's a, going concern business, and if the needs of the business require that you need a new ERP system, then you ought to do it regardless. Unless something's, right around the corner or inevitable for some other odd reason. But I would also echo what Sean says about, I think Sean has preached this for years, as long as I've known him. Hey, if you don't need to change, don't. Because it's not just something you decide to do and it happens. It's a lot of effort. It's a lot of cost, not just in dollars, but also in just mental and physical anguish with your staff and people and employees and that kind of thing. So, you should make sure you do it, and or that you do have the needs to make the change versus just, hey, everybody's going to NetSuite or everybody's getting a new ERP and, we're going to get zinged for QuickBooks or something. QuickBooks does a great job for a lot of companies for a long period of time. I'd ask a question back. Sean, do you see some companies maybe try to make a change too early? Like say, hey, they're on QuickBooks or they're on some other accounting and they just go, oh, we got to get off this. We got to change now just because everybody else is doing it.
Yeah, I think I'm trying to think of some good examples. Well, where it's funny is not just with a company that's growing, right? Hey, we're at 5 million. Oh, QuickBooks is fine. 10 million. QuickBooks is fine. 20 million. Oh, I don't know, right? We have a client up in Loveland that was like that. That was sort of a fast growing startup who now decided to go public. And we did make the decision to get them into an app that was a little bit bigger, not knowing what was on the horizon, but we knew there was a ton of growth coming. We didn't know how, but from the time we started the project to December, we found out how with these SPAC things. And thank goodness we got them into the product that we did, really solid tier 2 that could support them as a public entity. And they were maybe 15 million when we advised them. So, we're always looking at the horizon a little bit farther out, maybe sometimes than our clients are, and also a little bit more in the pain points that they really have today. And so we have said to clients, nope, that changing apps is going to just cause more problems. Don't do it yet. Do it in the future when this happens. Oh, okay. But then we also have it on the other side where we've got some organizations that are really big and they've been able to sort of make do with the apps that they have. And then we'll come in and we'll just look, we'll just observe what's happening. We have a global services firm we're in right now. And when we sat down with their collections people, of all the business processes, and we watched just the hellacious effort that these people have to go through to pull data from around the enterprise and into spreadsheets and all this manipulation. And okay, when was the last time you contacted the customer? Let me check my email. No. You shouldn't have those problems. Like, you guys are financially stable enough where it is time for systems. And that's why clients often hire us. They know that, right? They know they should do something. But it's interesting on kind of the other end of that, Lew, where you have a really large organization that either thinks they need to do something and you go in, you're like, oh my gosh, like all you have to do is look at the people and look at the guys and the gals that are down in the trenches and look at the amount of effort that they're going through with Excel, but the amount of manual work that they're doing. And it just becomes obvious because if we can make those people even 1% more efficient with either selling more or with cutting costs, but these people make them more efficient, it becomes sort of a no-brainer decision. And then, alternatively, we had a client up in Louisville 3 years ago, a pretty large software company that was acquiring other companies. And they, the interesting thing is when the new leadership team comes into a business and looks at the business and says, we have 3 clients like this right now, and says, no, we can't run our business on this platform anymore. And they're willing to put their neck on the line. And fortunately, in those instances for us, they're right. That there are certain circumstances where the business is floundering from an operational data, what's really happening on the detail levels. And so these newer folks that are brought in are willing to really risk basically their jobs to say, we got to switch. ERP advisors help us through this process. We had 2 really, really nice implementations on the Enforce side with a vendor here in town recently, that both projects had new directors of IT, and they both came in and just said, that's it, we got to switch. And I'm like, you really want to risk everything on that, right? Yes, we do. Good, then we're in. And man, really nice projects transformed the business. In those cases, thankfully, there was pre-COVID, they were able to keep their operations running through the whole work from home thing. So, software and people's careers can get mixed in. And I mean, we try to separate that out, but I think for the listeners, you really do need to look at, be willing to take the right risks. It doesn't have to be scary. I think, to reflect to what Lew said, it's doable. Just know what the risks are, and then you can manage them appropriately. And again, I think Lew's example is just like, it's classic on how, for his organization, for him and for his team, this is what's going to work, and you made it happen. And then, yeah, you get a good NetSuite consultant or a good Microsoft consultant who can kind of do their job. And the success is there. There's this terrible perception in the ERP world, albeit true, that a lot of projects fail. And like ours don't, right? You know, they don't have to. There's a lot of good vendors that ensure that's not going to happen. There's a lot of good apps out there where you're going to get a right fit. But ultimately, it comes down to people who are listening to this call to just say, hey, these are the risks. Here's how I'm going to mitigate it. Get out of my way and let me do my job. And boom, it happens. So
that's right. Well, you said it perfectly, Sean. You do your due diligence and you're aware of what you need and what could potentially happen. And you just, make it work the best you can.
And you have a margarita machine around at the end of the project, or whatever your favorite du jour drink is, so that people can celebrate and have a little bit of fun too, right? Because that's the other thing, is it gets like so intense when you're working through data sheets and everything else. Like you got to have a little fun, That's
Sean, that leads me to my next question. How can a CFO go about getting what they really want out of their ERP?
Well, I'll give you my view, but I'd love to hear what Lew has to say on that one too. But I do think this is going to sound a little awkward, maybe, but it's not your money you're spending on consultants. Here's what I mean. If you were trying to make a decision about something personally, right, like insurance or a car or a house, whatever, some big complex thing, you're likely to go hire an advisor to help you through that process because it helps get done faster, better outcome, and everything else. For our clients, right, as I view senior accounting people, they're usually pretty conservative, thankfully. That's why they're hired and put in those jobs. I mean, Lew knows these guys, they're signing on the dotted line that the financial statement is correct, right? There's no material misstatement at all. And, for our public companies, if that's wrong, they go to jail. So, I mean, there's a lot at stake, right? As a CFO. That's why, and whether we're the right resource or somebody else is, I mean, anybody can call us anytime and we will find you the right resource, but finding really good people that know the product and can help you quickly to get through the concerns or the questions that you have just helps immensely with just getting your confidence up on what you're doing and on ensuring you're doing things right from the get-go versus trying to struggle through something on your own. I mean, that's what I would say, Lew, but what do you think from the client side?
Yeah, there's the basic blocking and tackling from all the accounting, right? You need to get the financials out. You need to comply with whether you're a public company, got all the SEC and reporting. But I think for us, one of the things which was kind of unique as it related to implementing a new system was all the business information that we were able to glean from the system and actually managing that. Because here's what was happening. All our VPs and directors knew we had this new system and that we knew that all this data was going into it. So they were asking for reports like crazy, right? Like, send us this. Well, you send us this, send us this. And we just didn't have the staff or the resources to be able to do this. And so what we ended up doing was trying to figure out, okay, what do you need? Why do you need it? What kind of business decisions or operational decisions are you trying to make with this data, and then getting that standard? So I think these ERP systems can be extremely valuable to companies in that regard, because they do have a lot of that data and they can help your managers, your VPs, your directors and staff make better business decisions based on the data that's there. So, we found somebody that was kind of dedicated to do that after we had the thing up and running. So that was one of the things about getting more out of an ERP system than just kind of the basics of financing, accounting and financial reports for your board or public company, whatever. So
Lew, kind of to wrap up a little bit for today, can you share with our listeners what the most important message that you would pass along to CFOs that are considering a change in their accounting systems?
Yeah, it's going to be a little bit repetitive. I'd say it's kind of four things. I mean, if you don't need to make a change, don't. But, figure that out. right? Hire somebody or find somebody that can really go through the needs analysis to see if you really need it. And then I think what was key for us was that having an inside champion, somebody that owned it. And I think every organization needs the person that's the go-to person, the person that owns it, and is going to champion it all the way through. And I can tell you that probably should not be the CFO. In most regards, it should be somebody else, somebody that's a very good project manager and can harness all the people and resources and departments to get it all done. That was key. And then the advisor to help you do that, the consultant also that helps and assists that person, that relationship between those two, your inside champion and that consultant is very key. And then use that you'll find, I believe most people will find if they do make a change and they go through that process, they'll probably use that consultant on an ongoing basis as well, which is what we did.
Right. Well, that's great. Well, I think we've come to the end of our time today, but thank you, Lew, for joining us and sharing your experience with us. I appreciate it.
Yeah, thanks for having me. It's
yes.
fun.
So thank you, Sean, as always, for sharing your valuable knowledge with us.
Yeah.
All right. Everyone, thanks for joining us for today's call. We appreciate you taking the time. Please let us know if you have any questions. We're happy to answer. We're happy to help in any way we can. Just reach out. You can call us, email us, whatever works for you. Be sure to join us for our next call, Wednesday, March 31st, an introduction to ERP for nonprofits. On this next webinar, we will reveal what we have discovered from working with nonprofit organizations, along with a look at how to find the right ERP for your organization. Please go to our website, erpadvisorsgroup.com, for more details and to register.
ERP Advisors Group is one of the country's top independent enterprise software consulting firms, advising mid to large-sized businesses on selecting and implementing business applications, including ERP, CRM, HCM, business intelligence, and other enterprise applications, which equate to millions of dollars in software deals each year across many industries.